What is up, guys? It's Selka, and today I'll be breaking down Bitcoin using the wave theory, of course, but this time I'll be talking a little bit more about the wave theory since I've seen your comments. So, you guys want to learn more about the method, and that's why I'm making this video to explain a little bit more about some rules that we use in this method, as well as the way we see charts in general. So, the way we see these patterns and the way we can forecast which direction we're gonna get. So, with that being said, we'll get into the first rule, that is the basics of the wave theory, is that the every charts, every assets moves in terms of waves. So you never get to see an asset that will go straight up looking like this. You often have some impulse and some correction, and these happens in every time frame. So when you get an impulse, a correction, an impulse and a correction, for example in the 4-hour chart, but when you put that in the daily or weekly chart, this becomes an impulse. So these correction doesn't even, you can't even see it when you go on higher time frame, and that's why these correction gets a bigger one later on. So a one that will be that you will be able to see in bigger time frames. So for example, in the weekly, you won't be able to see those little correction, but you'll get to see the bigger ones. So for example, you got this in the 4-hour chart. In the weekly, it will look like this, but eventually you'll have a correction that will be shown in the weekly, and that will take really more time in the 4-hour chart, for example. So that's just some basics. Knowing that, you should understand that when you have an impulse, you often get a correction, and after that correction you have a lot of probability of getting another impulse. And that's the basic of the wave theory, is that knowing this correction leads you to take the trade from the bottom of the next impulse, as this is the impulse that you're looking for, and this is the one you'll try to ride every time. So that's the goal. Every time we should try to get in this wave and ride this next impulse. So now that we know that the correction is the most important part of this method, as well as the analysis in general, you get to understand more these correction by knowing the wave theory. So in the wave theory, there are 4 main correction that I wrote right there, for example. So the first one is the regular flat. It looks like this. It's when you have an impulse, you get a first retracement like this. You get a correction for that retracement that I put in orange. So a correction that will slowly go up, but that will not break this top. Then you get to see another retracement, another dump looking similar to the first one you've got. And this completes your ABC 3-wave correction. Then whenever you broke this low, you'll look for buy setups, because the next step will be the impulse. So most of the time correction goes like this, as well as like this, which is the running flat. So both of these correction are the one that happen most of the time, and these are the correction that you should be looking for, at least having in mind whenever you see moves having an impulse and a retracement. So whenever you got an impulse and a retracement, you're looking for both of these correction first. All right. So the running flat, the difference with the regular flat and the running flat is that the running flat breaks the top of the impulse. So this B wave slowly comes up as a correcting wave for that down impulse, of course, but it slowly go up and break this top. So whenever you see that the top is broken, you always think about the running flat first. So you'll see that the difference between all these correction is the top of the impulse and the bottom of the first retracement. So those are the 2 main things that you'll be looking at in order to see which correction you're in. So for example, we've got to see an impulse and a retracement, and then we've got to see a move that is slowly coming up to break the top. The first thing you think is running flat, and then you expect having another retracement that will come and not break this top before getting the up move that will be similar to this impulse. So as you can see, every time both impulse are matched, both retracement are matched, and what's left is the correction that is solo, and often this correction is a range that takes some time. So these correction happens in every time frame. Again, you can see them in the 1 minute chart, and this will accumulate and form bigger bigger impulse in the higher time frame. And that's why these are really important to know, because you'll see these in every time frame, and even in the bigger time frame in the weekly chart you'll be able to see them, and that's how we forecast an uptrend in the long term. For example, a bull run to me is a correction that is in the higher time frame. So if you get correction looking like this in the weekly chart, so this have been ranging doing this for example 5 years, then you're looking to buy in this zone, and this will be an up move and impulse that will take quite some times, maybe 2 year 1 year, but this will slowly come and break the top. And that's what I think that the bull run is simply a correction that is in the higher time frame. So I'll get into that later. All you need to know is that these are the 4 correction, and the 2 correction that happen that doesn't happen a lot of the time is probably the expanding flat as well as the contracting flat. So this one, for example, the expanding breaks the top, but the dumps that you get to match this first retracement comes down and breaks the bottom as well. So this correction happened not a lot of time, and you should not be, you should at least have this in your mind when you get to see a retracement that breaks the low. But you should not think like this correction will happen, because most of the time this could be simply a correction, a dump, and all this move can be your impulse, and you just don't never get the other impulse that breaks the top. You simply get a correction to go further down before you get your up move. So these correction contracting and expanding are pretty tricky, and that's why they don't happen a lot of time. And I think you should consider it, but never having it as the first scenario in your mind. So contracting is different. This one doesn't break the top, but also doesn't break the low. And why this correction is, in my mind, one of those that doesn't happen a lot of time is because you can sometimes think that this is the impulse that will go up, but whenever it breaks the top, it goes back down and forms a bigger running flat, just like this one. So retracement, all this becomes your correction, and you get your other retracement to match this one before getting the impulse to match this one. And whenever you do that, if you take the buy from somewhere there, then you get fucked by this retracement that come back down before going up. And that's why this one is tricky as well. So both of these corrections are tricky, but the most important one are these one for sure. So always keep in mind that these one are the one that has the most probability of happening. So now that you know these correction, we'll get into the Bitcoin chart and talk a little bit more about it. So for example, I won't go deeper into the past, but I'll need to talk a little bit more about what happened before we get all these moves. So for example, right there, you get to see an impulse and the first retracement. So first thing you think is that you look for some small correction that will slowly go up, and you take care if that comes break the top or not. So for example, this one didn't break the top and got a second impulse down. So from knowing that, you know that this is one of the correction that you have in mind. It's the regular flat, and you know that it happens most of the time. So you see that retracement, that correction, and another retracement. So this become a 3-wave correction known in your mind. So from that point, you can look for buy setups, because the goal will be to ride an up wave, an up impulse that looks similar to this one, and that's what we've got later on. So that's just one of these examples. I can see them all the way in the chart. For example, this one as well. Let's say this one. This one was a first retracement because it also worked in the downtrend. Just before I get into it, I need to show it to you. These correction works in downtrend as well. So if I do this, you'll see that if you get an impulse down, these correction happen also in downtrend. So you get the 3-wave correction, but you look for an impulse that will come and match the first one. So an impulse that will go down. Same thing for regular flat and the other 2 correction as well. So these happen in downtrend as well. So that's why right there, when we get to see this first impulse down and a retracement like this, you wait for a correction, a slow move, and you look if it breaks the top of the impulse, so the bottom of this down impulse, and also if it breaks the top of this retracement, so the bottom of the retracement if that's in an uptrend. So we see that this correction didn't break the bottom but broke the top, and from that point we knew that this was a regular flat, just like this one was for an uptrend. This one was for a downtrend, and that's what we've got to see the other impulse down. So again, remember, these happen in every time frame. Now we're on daily, and of course we cannot see those happening in, for example, the 1 hour chart or the 15-minute chart, but we can barely see that those are correction, as they are small move after an impulse. We know that these are correction, and if we zoom in the time frame, we will see them correctly as if they are running flat or regular flat, or the other two correction that I talked about. So that's, for example, we now can see clearly that moves happen with impulse and correction, and we get to know a little bit more about the correction. So from that point, we knew that this was a correction for that impulse. This was a correction for that impulse probably, then another impulse, another correction, then another impulse, and a bigger correction. So now the second point that I want to talk with you guys is that whenever you get an impulse and a correction, and another impulse, obviously, all this becomes an impulse, and all this will need a bigger correction in order to simply correct this impulse. So for example, we had this small impulse, this small correction, another impulse, so we've got to see a bigger correction, then another impulse. So now all this impulse needs to be corrected, and that's why we've got to see a bigger correction. So again, small impulse, small correction right there, probably a running flat, small impulse, small correction again, small impulse, and now we've got to see a bigger correction for this impulse. Now you get the point, because we've got to see this correction, also this one in turn, and we've got to break the low of the last impulse down. Now we're looking for a correction that will be correcting all this move down. So all this move needs to be corrected, and that's why I think that we're gonna go in the uptrend. It can be any type of correction that it does during that up move, but we need to go in an up wave that will be correcting all this impulse at least. So the correction can go break the top or not. Most likely it will not break the top, as it is a B wave, and most likely it's going to be something like this. All right, so we're in this zone for Bitcoin. We're looking for that wave. All right, we've got this for Bitcoin, so that first retracement impulse, we're looking for that wave, that orange one. All right, and that's why I think that I tell you guys that this one can come and break the top if that's a running flat, but most likely we're going to look for a regular flat, because I think that this move still has a lot of people that are stuck in these tops, and I feel like I don't think that the price will reach higher without just simply getting the sell pressure from those people. So I think that it's fair enough to aim for a B wave, so a corrective wave that will not break the top, and then dumps maybe later on for the bigger structure, for a bigger correction, a bigger three-wave correction called regular flat this time, and then having the up move. So of course, it's too early to forecast this little C wave, because we don't know if the B wave is gonna break the top yet or not. But you can see that we're looking for a correction that for this impulse down. All right, and because of that, that's why I have this up move looking like this. Is that I think that we need a correction bigger than these ones to be the B wave that we're looking at, so the orange arrow that we're looking at. So that's why I'm looking at this move like this, and that I'm expecting this up wave like this. Now let me remove all this. I don't think that I'm not sure yet if this is the bottom, the local bottom that we'll get before having this up move, and no one can tell you, because no one can give you price target, but the more it range right there, the more this looks like an end of a structure. So an end of a structure is another complex thing This is just to know that we've got to see less and less sellers, so more people already sold, and we've got to see more interest into the assets, so more chance of having an impulse and a correction to start the up move that we're looking at. So basically, the more it's range going down, so the more it's crawling, the better it is, simply. So by knowing that, you understand that if we go up and we make a correction like this and we go up again, this is another chance to go down even deeper, because this is a chance to become a regular flat for an impulse, the impulse before. But does the fact that it is ranging and crawling makes the chance that we've get to see correction, smaller correction, and one time this correction will become this impulse will be near the end, and we get to see an impulse and a correction to start the up move that we're looking at. So I hope I'm really clear on this, because I feel like I'm not talking I'm not explaining well enough, but it is super important things in order to know how the wave theory works, and why I think that this move will be up and will take some times. All right, so you know that correction takes times compared to impulse. So if this is your impulse, that means that you can be stuck in a correction for quite a long time. So this can be pretty longer than the impulse. So at first we're looking at the correction longer than the impulse. It's not it doesn't happen every time, but most of the time it does. So you look for a correction that will take longer time than this, which is I think 1 year. This dumps is 1 year old, so this could be a correction that will be stuck in it for more than 1 year. But it's still an uptrend, and this will lead to having some up move, up impulse, and correction in smaller time frame that we will be able to trade. And yeah, so that's everything I wanted to say about Bitcoin and why I think that we're going up in the long term. So I really don't want this video to be too long for you guys, but I really hope it will be useful at least. So remember, for Bitcoin, the more it drops, making smaller correction, the more we're looking near the end, and we'll be waiting for the B wave that we're looking at. And remember, this wave will take long, like it will be long and will take long time as well. So I'll be there to give you forecast about every little move that we get to see in the smaller time frame. So I really hope you guys enjoyed this video. If you like it, I'll try to do other video like this and explain a little bit more about the wave theory and the method I use for my forecast. So thank you for watching. See you next time.